Good afternoon, everyone, and welcome to today's member session from co-hosted by NAIC and BroadView Talent Partners. This afternoon, we are excited to have Tracy McMillan from BroadView Talent Partners leading the conversation alongside two experienced professionals who will provide us with amazing insights around what it means to really leverage talent for portfolio companies from PE and VC firms during this time. We are very pleased to be partnering with BroadView Talent Partners as a strategic partner here at NAIC, really having the opportunity to share the insights and the experience as well as expertise to walk alongside our NAIC member firms as they continue to make sure that their portfolio companies are staffed with the right human capital as they are investing financial capital into these companies. So with that, I want to thank again Tracy for joining us, and he will introduce the panelists and get us started with the conversation.
Thank you, Marissa. Thank you, Bob Green and NAIC for helping us pull this together today. As Marissa indicated, I'm Tracy McMillan, CEO and Managing Partner of BroadView Talent Partners. I'm grateful to convene today a discussion entitled Leveraging Portfolio Company Talent in an Ever-Changing PE and VC Landscape. Over the past several years, especially the past 24 months, conversations happening in PE and VC firms have shifted quite noticeably. Capital is more disciplined, hold periods are extending, exits require narratives, stronger narratives, and operating rigor has been intensified. But of course, growth and ROI expectations remain the same. And our work across a broad number of sectors over the past 31 years, including family-owned and private equity portfolio companies, one theme kind of remains consistent. Differentiator out there now is no longer just access to capital, it's access to the right leadership at the right phase of a company's growth and life cycle. In the buyout realm, an immediate mandate for performance optimization exists. In the VC realm, it's navigating nuances regarding the founder DNA and infrastructure related to founder operations. Today, we are fortunate to bring you two different perspectives from our featured panelists. I'd like to introduce Maurice Markey, CEO of ProFood Solutions, a portfolio company of IMB Partners, an NAIC member, and Troy Stovall, CEO of TEDCO, VC firm, technology and life science startups based in Maryland. Why don't we start with Maurice and give a little brief overview, Maurice, about who you are and what you do in your role at ProFood Solutions?
Thanks, Tracy. Happy to be here today and join NAIC and BroadView, my co-panelists, Troy. By way of background, engineer in a former life, grew up at Kraft Foods, strategy, general management, brand management, both in the US and Asia, then over to Walmart, and then on to Eli Lilly in a variety of executive management roles. Had the opportunity and privilege to come on with IMB back in the fall of 2021 as an advisor, and then was installed as the group CEO for IMB's food distribution platform, then three-company, now four-company platform that supplies food to the US military and one of the largest suppliers of food, both in the 235 worldwide commissaries or grocery stores, as well as the troop feeding program, wherever our women and men in uniform may find themselves needing to eat. It's likely ProFood Solutions in our portfolio of companies that provide the food to the US military. Happy to join you guys today.
Thank you, Maurice. Troy?
Yeah, extending Maurice's thanks to NAIC and to you, Tracy, and to the team here. Appreciate and the folks who are listening. And hopefully you're going to get something out of this and look forward to the conversation with Maurice. So kind of like Maurice, I'm an engineer, computer scientist by training, went over to the business side, had been privileged to work at places like, I have to always say, the old Southwestern Bell, the old AT&T, so of course I'm aging myself, and the old Bell Labs, but also places like McKinsey, which still is around as far as I checked last week. But started a couple of family offices, one of those being one for a guy by the name of John Palmer. No one probably knows the guy, but you'll know his company. He started SkyTel, the paging company. So I started and still advise his family office. And also for another guy you probably heard of, a guy named Jim Barksdale. And so also done some work for Jim Barksdale and done some work with his family office. And so started a couple of venture funds through that, through those with those two gentlemen. And then I like I said, took a detour, Maurice and Tracy. I went to higher ed and I've been the CFO or the COO at places like Jackson State, Howard University, Southern University, and the University of the District of Columbia, UDC. Um, and have been the president of a for-profit entity as well. But now I lead TEDCO, and TEDCO is the for the state of Maryland. We're the venture into the state of Maryland, and we do both economic development as well as venture development. Venture. We're a venture capital, so people like PitchBook rank us as one of the top venture capital funds in the country. We're about 250 AUM. We've got over 11% ROI. And so we're considered, given our limitations and what we have to do and what we invest in, we're at the very early stage. We work with a bunch of the universities here in the state, as well as the federal labs in the state. And we're really good at taking those nascent ideas and bringing them venture ready and getting them to scale. And so I'm looking forward to this conversation about what we do in terms of staffing and talent acquisition and retention at the early stages.
Thank you, gentlemen. Let's start off with a couple questions for both of you, and then we'll get more granular into the PE versus VC platforms. Maurice, starting with you, how has the definition of top portfolio talent, in your view, changed over the past 3 to 5 years?
Talent is just critically important in having subject matter experts. And I think how it has changed is, especially in our space, middle market, adjusted EBITDA in that $2 to $15 million range, lower middle market. Many of the businesses that we buy are family-owned businesses who have built great and wonderful businesses, but may not always have talent top of mind. So I think how it has changed is really understanding that talent can and is a differentiator in the marketplace, and you really need to think about talent early in the process. Dare I say, during the due diligence process, really assessing the talent of a target acquisition and understanding where you're going to have to invest so that you can achieve what you're trying to do with the acquisition. So I would just say, the way that it has changed in part is it's accelerated. You're thinking about talent earlier. You're thinking about how and where to go source talent. We're working with firms like BroadView, Tracy, and other executive search firms to really go out and get subject matter experts, get people who have proven themselves in the marketplace as leaders, so that you can bring them into the organization and you can have this acceleration in whatever your agenda may be. But those are some thoughts I would offer.
Troy, give us your perspective from the VC world.
Yeah, and I'm answering from the VC world, but just a little bit, because it goes back to my background. I actually now also serve as the audit chair for a company that's $1.5 billion revenue, held by two private equity firms, CVC and CD&R. So I have a lot of what Maurice says. I'm actually going through is we're looking for a CFO right now, so I understand exactly everything he's saying, and I'm leading that search. But at the early stage that we invest in, it is a little different, obviously, and I'm always reminded of when I did start off in the venture capital world, and when I was in Silicon Valley. I got taught an axiom that I'm sure many of you know, that at this stage in particular, you always invest in A quality people that have a B quality plan, and never the reverse. Never B quality people with A quality plan. And you ask, Tracy, what's an A quality person? Someone that's coachable. Or another way that I like to tell the story is, Tracy, you might have a great idea, and you go talk to 10 of your friends about that great idea. And those 10 friends say, Tracy, that is the best thing you ever, boy, you need to go to market with that. You come to us and we tell you, them the only 10 people gonna buy that. Now, if you want 10 million people to go buy that, here's how you gotta pivot. Here's how you gotta do something different. And what I'll close on is that we're looking for individuals who are willing to be coached, who have passion for their idea, but understand that they don't have the idea. And so I differentiate. We're talking about how long we've been married before we got on. I want people to have passion about their idea, but not be in love with their idea. Because if you're in love with it, Tracy, that means you got to divorce it. I don't need you to divorce your idea. I need you to be passionate about your idea, want to be coached for your idea. And the other last piece I will say on this is when you're building your team, too many times you're building your team with your boys, with your girls, with your frat, with your sorors. That's all well and good. But
Mhm.
every once in a while, you need to find people around you that's going to push you and accelerate you because you are not going to have all the ideas. And if you surround yourself with too many folks who are group thinking, you frankly aren't going to advance. And frankly, for an investor, you're not going to get at the pace that we need you to move at. And that's just the truth.
Appreciate both perspectives. One of the axioms that I have extolled over the past 31 years is every leader, he, she, or they, doesn't have to have it all. They have to be able to lead it all. They have to have a preponderance of it all. Any
Yep.
blind spots that they have to be ably and mightily filled by any direct reports they currently have or ones that they can strategically hire. Therefore, organizational risk is effectively mitigated. When we think about the roles that are most critical, and Maurice, I'll come back to you, that you're looking at that you've hired on over the past 12 to 24 months. What talk about some of those roles and why were they so critical?
Yeah, I would talk about three or four in particular. It seems almost inevitably you need a strong finance leader. Oftentimes, again, the space that we operate in that may or may not exist, and I'm always looking for talent and leaders that have been where we're trying to go
Mhm.
as a business and a platform. And so financial acumen, as you would imagine, is critically important. That's often higher one. Secondarily, sales, right? So I'm trying to grow this thing, right? So I need experienced sales leader, ideally subject matter experts and folks who have a network in the area in which we operate. So we're food distribution,
Mhm.
right? So, I may be looking at the pond of broadline distributors in which to look for talent, the Cisco's, the US Foods, the performance food groups, if you will,
Mhm.
food service management, the Sodexos and Airmarks of the world, CPG companies. So sales is critically important and often is right there at the top of the leaderboard as it relates to talent. Um, we recently hit a tipping point relative to scale of employees, relative to operating in at five different sites. Well, what's the so what to that? Well, I have employment law in five different states,
Mhm.
to include California, which can become complex. And again, space I operate in, having someone who is focused on human resources is often a little bit of everybody's job, namely the president, right? They do a little HR on the side. We hit a tipping point. We say, you know what, we really need a CHRO that I can have somebody getting up every day, all day, thinking about our people. If we profess that people are our number one assets, let's put our money where our mouths are, and let's go hire someone that's all that they're thinking about are our people and how to advance in that area. So we hired a CHRO this year, and then lastly, what we are likely moving forward with here soon is a chief information officer, and certainly we have some very talented technology leaders, but as we all know, no sooner than technology is released, it's obsolete almost, right? And so you need someone who can stay up on top of it. First and foremost, security. A security breach would decimate an organization like ourselves. And so, really instilling security and how our team needs to think about things is of utmost importance. AI is its own world, and how do we think about it? How do we use it? How do we deploy it? How do we put guardrails around it to protect not only our information, but also our folks, and then our ERP systems, our platforms, the things that allow us to communicate, especially when I think about across sites and across divisions. But that's some of the talent that we think about: finance, sales, human resources, and technology.
Thank you. Troy, you come from an amazing sort of technology bent. Talk to us about some of the things that you see in early stage VC companies, and also add in a little, bit about what you see, also what your the board that you serve on, the CFO.
Yeah. Let me start with that to follow up with what Maurice is saying. I think, from a board perspective, thinking about that C-suite is, in particular, obviously the CEO, but that's probably the most important job we have as a board, and thinking about it, but also helping that CEO think about culture. I think the other word I'll throw into the Maurice talk about is thinking about culture. Because, when you get to a certain talent level, you can always find the technical, whether that's the CFO or the CMO or CTO, whatever it is. You can technically find a lot of people, but I think, part of your job, Tracy, I'm sure, BroadView and others, is how do you shrink that pool down and really understand the culture of the organization? And because you can bring someone in and they not last long, and that's just a waste of time and money and energy and an exhaustiveness, if that's a word, for the organization. So I think my point being is, I think there has to be more of a conversation, particularly it's where Maurice is at and the scale and where we're at Epicor. It's not just about the talent and the technicalness of the talent. That's also another word I just made up, but their fit. And I think the other part of this is, and I know we're not going to have a necessarily DEI conversation, but as you are progressing to your career and you're leaving those footprints, both physical and digital and social footprints, when we're at this stage, I'm sure Maurice is doing this, working with a BroadView, whoever, we're going to be checking those footprints and asking about how did you deal with failure? How did you deal with success? How did you deal with the last CEO you were with? Those are, frankly, more important conversations than, do you know how to do a balance sheet? Do you know how to deal with digital threats? Do you know how to go to market, or how to do certain market segmentations? Because those are skills that, yes, we can check the box on those. It's really hard to check the box on this cultural piece. And I would argue, particularly for the growth, I know that my friend Maurice Taurus is trying to get to with IMB. You got to think through about that part of it. So I don't think we're going to lose that as you have these conversations as we go forward. Shifting to the front end where we sit, it's a little bit more complicated, particularly for TEDCO, because we invest in technology and life sciences. And the pathway for those are extremely different. And how you think about the skill sets are stage based. And so, but I'm thinking more and more, like you talked about, Maurice, is I think people want to run and get a CFO or even a chief technology officer. And I think those are important roles in both of those pathways. But having someone who can help you think about talent acquisition, even at the early stage, is important. So our model here at TEDCO is we have what we call LENA, Loan Executives and Network Advisors, individuals who act as virtual talent pools for these organizations they couldn't normally afford. We've just launched a thing we call Back Office in a Box, where people can actually get access to highly qualified and highly differentiated accounting and IT services that they couldn't normally afford. The whole point is to create a scale across their back office around these other functions. Because sometimes, as a startup, you're not thinking about payroll and accounting, all this other stuff, but you got to have that right to get that next round. And so we thought to how do we virtualize that and bring those talents on in a way that don't cost them at the same level. But again, as you think about the stage, that initial stage, in particular where we start out, you need good technology people, whether that's in technology or life science. And in life science, you need people who over time understand the FDA process, understand how to do clinical trials. If you're on the tech side, how to think about eventually go to market, how to eventually think about market segmentation, how to think about product road mapping. And so I'd say it's a much more nuanced conversation because they don't have the resources to afford all that talent. And so how we can leverage that with the work that we do, in addition to helping them think more methodically about that talent acquisition as they move along, as they get more resources, that's the hard part of the conversation at this end of it.
Appreciate that. And let me just make one
Tracy,
note. Go ahead, Maurice. Go
let
ahead.
me
Quick
just
follow-up.
emphasize a
Sure.
point that Troy made. It took me back to Paula Sneed, who told me early in my career, and you know Paula
Mhm.
well, that just being very good and even the best at what I did at the time, a marketer, wasn't enough. And she talked about this whole notion of leadership
Yeah.
and leadership as an X factor, a
Mhm.
component of that, which is very important. And sometimes we lose sight of it. I think during the hiring process is a cultural fit, which is what Troy
Mhm.
just talked about. And we talk a lot about collaboration and innovation and humility, and they're just not words on a page or up on a bulletin board or on a screen saver, but we really think about it. IMB talks a lot about people in partnership, right?
Yep.
And really trying to assess working with firms like yourself, Tracy, to really get at and try to tease that out. Are people a good fit for the culture? Because if they're not, that's the thing that kills people in their career oftentimes, is not because they can't do the work that they're being asked to do.
Mhm.
Can they be a strong leader and a
Thank you, man.
leader that carries forward the culture at every space that they may operate in, whether they're coming into a board presentation, whether they're talking to associates in the warehouse, or whether they're out speaking to customers and partners. So just wanted to double click on
Yeah,
that
and
that
just so
particular
this makes this
aspect.
conversation, I just finished a book, Tracy, that differentiated for me
Mhm.
the difference between values and virtues.
Okay.
Values is something you aspire to be. Virtues are what you are. And virtues lead to you showing how you do value things. And so my point is we all can talk about value. All of us have corporate values that we want to do. And I'm not even changing my language, but virtues is what I want to and what I show up every day being. And
Mhm.
that's that footprint that I'm leaving behind. And when folks then do that reference check on you, the question to me, whether it's a Broadview or whomever, the question is, do they live their values by what they shoot through their virtues? And so that's the conversation you want to be able to have. Just at a personal level, when I left UDC, I guess now 6 years ago, I never forget there was one of the board members, it's a Jewish woman. She came to me when I was leaving. They were giving my roses, and they said, "You always led. I always knew you were a person of faith, even though you never told me anything about your faith." And that's one of the best compliments that I ever got,
Mhm.
because and that's what you want people to remember. And when they're going to pro food and people they're doing a reference check, you want you want them to say, yes, you're a good marketer, you're a good account, you're good whatever, but they also want to be able to say, knowing your environment, Maurice, knowing the type of leader you are, that guy's going to have your back. That young lady is going to be there for you.
Appreciate that. I want to interject one thing to the audience. So excited about getting to start. I forgot to sort of frame how we will navigate the rest of this discussion. It's about 40 minutes of content with this discussion, and we're going to turn it over last 12, 15 minutes to you for Q&A. So you will have plenty of time to address us with questions. We will not forget about you. But you guys sparked a number of thoughts with your comments. One of the things that we encounter all the time is that our clients go through sort of four phases of evolution as they're about to make a hire. One phase is they have a job description that they've already sort of preformed. They know what that looks like. The next phase is when they retain the firm, they do stakeholder interviews, copious stakeholder interviews for all the key players and constituents surrounding the success of that role. Then they start seeing candidate flow. And they start to frame again some thoughts about what the true must-have skills, abilities, attributes, characteristics, qualifications, and competencies actually are for this role, and what of those sort of represent what I'll call the midterm exam and the final exam in terms of the weighting of those, if you will, because you might have 5 to 7 of them, but which one is going to actually turn and ultimately drive your final decision? And then you have the close, where you're with two finalists, hopefully you've narrowed it down and you've done your reference checking and an emphasis on informal reference checking. We talked about this, gentleman, during our pre-call that our clients are placing a lot more rigor on that
Yep,
informal due diligence. I should be able to call Maurice and Troy at any given point in time to talk about another individual. The client is blind. The role can be mentioned, but I want to find out about that person's how are they on their worst day? What are their foibles?
exactly.
What are their blind spots? What is it
Yep,
that they don't will? Because you heard my axiom earlier. Every leader doesn't have to have it all to be able to lead it all. They got to have a preponderance of it all, but very seldom do they have it all. We're not perfect, right? But we have areas that we need to grow. And that's where also coaching and other things come in. Tell me about, and we'll start with you this time, Troy, about how you go about looking at this as it relates to, when problems arise or reacting to performance gaps, and especially as it relates to the founder, because you have a very tough axiom about the things you have to say to founders.
Yeah, no, what Tracy's referencing, I think, one of the hardest conversations you have to have, and I see a number of friends on here who had these conversations before, is the hardest conversation is going to that founder and telling that founder, you ain't it no more. You can't sit in that seat no more. You're not the one to take it to the next level. And that's a brutally different. You can still share in the economics. I ain't taking a share away from you. You still have your economics, but you can no longer have some CEO or COO title behind your name. That's not gonna happen. If you want to keep it, that's fine, but you're not getting any more money from us, and probably from nobody else. That's your call. And that's a tough conversation because again, at this early stage, there are so many moving parts and so many things you're having to deal with. And I think what people don't always understand is the skills that go from A to B won't get you from B to C. But everyone thinks that they have the skills to take them from A, B, C, D because there's an arrogance, frankly. And that's back to being coachable and understanding. You said, what's your limitations and what your abilities really are.
Mhm.
And I think arrogance is probably the biggest issue that I see in founders that we deal with. Is they are brilliant individuals. They come with these amazing ideas. And they have allowed their success. I call it the arrogance born out of success. The arrogance born out of success blinds them to what their limitations are. Is a very, very quick story, and I'll turn it over to Maurice. We had a young man who we had promoted. We had put several $1 million into, had a great, obviously great service, great product he was offering. And we saw the headwinds. And he never called me. And several months, if not almost a year passed, and I knew one of the obviously investors that we had a consortium in this particular investment, and he called me, the investor, and he said, Troy, I'm not gonna name names. He doesn't want to talk to you because he's embarrassed because he knows everything you tried to tell him, he didn't follow, and he's just embarrassed because he failed. And I finally did talk to this young entrepreneur, and I said, look, man, let me be clear to you. And actually, we were fraternity brothers. I said, dude, you could have always called me and you still might have failed. But the point is, and I guess the point I'm trying to get at here, Tracy, is it's important to understand your limitations and say, I don't have it all, and make the phone call. Hey, I need help.
Mhm.
I think the hardest thing of a young entrepreneur at this stage of talent is to say, I need help. I don't know it all, what you just said, Tracy. And he waited too long, and there was no pivoting available to us to do. We just have to, sink the business. But what I will leave folks with is, if as you think about this journey, you better be ready to take on pivots. You better be ready to think about failure as an option. And yes, success is the destination, but failure is one of the way markers along that way path to success. And too many entrepreneurs don't want to go through that part of it, through the failure part of it. And if you don't, then don't get into this game. It's just that simple for me.
Maurice, what about you from a portfolio company perspective? What are some things that CEOs and other leaders underestimate about what it takes to succeed in your realm?
So to succeed, or I thought we were talking about managing performance.
Well, performance,
Yeah.
right?
Performance, yeah.
It's correlated. Yep.
Okay, just want to make sure I'm answering your
You
questions
got it.
appropriately, Tracy. But no, the whole notion of performance gaps and trying to manage through that. And again, I bring people back to my space, family-owned businesses. You have cousins and friends and
Mhm.
other folks who have grown up in the organization. And when you do this thing right, you're trying to grow, which we have. You're growing significantly. So the business we are today is tremendously different than the business we were 2 years ago,
Mhm.
than what we were 5 years ago, than what we were 7 years ago. And I'll take a digression for a quick moment. I think this sermon that my pastor told years ago is always applicable. And he talks about life as like this high-rise building, and you never know when your floor is going to come and you're going to have to get off. And there's only one
Amen.
penthouse in this high rise, so everybody can't live in the penthouse, and you might have to get off at floor 3. You might have to get off at floor 7. You might be fortunate to get off at floor 30, but you may not make it to the penthouse. But people might tap out, or they need to move forward, and that's just inevitable of some folks and the level of talent that they have. One thing that, again, I try to operate against is this whole notion of hire slowly, fire fast, right? Oftentimes we have it inverse, right? We hire fast and we get a bad hire, and then we let that linger and fester, and it creates other issues and things of that nature. When you do it right, hire slowly, fire fast. But then what you try to do is, and that's why performance management is so critically important, right? That on some cadence, you're sitting down with people, letting them know how they're doing, where the gaps are, what they need to be doing. And I've been in organizations, and you know this, Tracy, big and small, who don't always do that. They don't always look in people's eyes, tell them what they need to do and how to be successful. And I dare say people that look like us, sometimes they don't, and they did not hear that, right? But performance management is key here, so people can understand how they're tracking. Then we try to give people an opportunity to be successful, right? You may not be successful in this role, but you have so much talent and understanding about the company. Can we find somewhere else where you can be successful and contribute? And the organization, nobody wants to get up every day not doing a good job. That's been my experience, at least very few people. So performance management, you give people the opportunity to be successful. You try to hold up a mirror for people and let them understand where their gaps are, and you hope that people do some introspection and can understand it. But oftentimes, after you do all of that, this individual is not the right individual for the roles, not the right individual for the organization as we go forward. And, being fortunate to sit where I sit, I have to lead and often make those calls when it's ready, when it's time for us to move forward. And what I say we go to lastly is this whole notion, and it sounds kind of cliche, but respect for the individual. It doesn't have to be super adversarial, although it can get that way. But I just always try to maintain a respect for the individual and decouple John Doe, the person, from John Doe, the professional. Pick your area, your discipline, and move on and move out, and let an individual go on to somewhere where they can be happy, where they can be successful. But it's this thoughtful process that we try to go through, and I dare say, in part, it begins with performance management and really assessing talent, giving people feedback on a cadence so that they can know where they stand in the organization, and they have the opportunity to course correct and be that employee that we all want them to be.
So I want to, again, to keep this a conversation.
Really quick, Troy. We got to move on.
Yeah, because I just went through some of this. And so I real quick to your point, we as managers, we know when we got a cold in our system, but we ignore the cold. We try to go get an overprescription drug. And that, because we allow that cold to become the flu. Mm-hmm. And all of a sudden we think we can inoculate something. And then that flu, hope it don't embarrass anybody, becomes stage 1 cancer. And then it becomes stage 4 cancer. And when it becomes stage 4 cancer, we all of a sudden want to deal with it when it's stage. And that's a harder thing to deal with. We could have dealt with it when it was just a cold or the flu. And so I learned just recently that I could have dealt with something when it was just a cold or a flu, and I let it metastasize into the organization and let it become a cancer. And too many times as managers, we don't use our performance management systems. We don't, and we already know, we're smart enough to know this person is not performing. And we always, to your point, Maurice, we try to give them the benefit of the doubt. And sometimes that benefit of the doubt becomes years later, and it's because a significant issue for the organization. And it's much harder to deal with when it becomes stage 4 cancer.
Excellent, excellent. One of the things as we more into the value creation and what I'll call talent ROI segment of our discussion. We are in this mode post-pandemic. I've seen this more over the past 5, 6 years than I did the prior 5, 6 years, where generational shift has occurred. Baby boomers are retiring in record numbers. I'm the last of them, having been born in '64. Many of the leaders that we place nowadays are ex-gens, those who have been born from '65, somewhere in the early to mid '80s, and they are, they have what we call functional ADD. Doesn't require a pill, doesn't require a prescription, but they will stay at an organization 3 to 5 very readily, 5 to 7 somewhat speculatively. They're not going to be around and in our holding periods for PE or VC. That's not needed. But talk to me about the ROI, how you measure ROI, how do you measure first year success of a hire? Maurice, I'll start with you.
You want to bring in somebody. So one, I'll start with, cost of failure is too high. So you really have to get it right. And when I say cost, clearly the cost monetarily to recruit a particular individual, not to mention all of the man hours that they go into it, right?
Mhm.
And so I really measure it by when we hit it right, it's like magic, right? Because you've had 2 or 3 strategic imperatives that the organization just hasn't been able to move forward because you
Mhm.
don't really have the right individual leading that effort. And when you go out and get that right individual, it's like an accelerant, right? And the after you get through the process and you sit down with them the first time and you ask them what they're working on and what they're focused on, and they've made progress already on those things, right? So I really think about it as, are we accelerating? We brought an individual in for a particular reason. We're pretty diligent about our initiatives and what we need to do over a 5-year period, 3-year, 1 year, each quarter.
Mhm.
And is that individual adding the value that we had hoped for them to add and accelerating that? Just on the new talent piece quickly, one of the things that I had to do as someone who has been around for a while, and we all have our blind spots as you thought about it. I see this resume where somebody's, changing jobs every 2 or 3 years, and I'm skeptical, right? And my team who spent more time with them, they're all excited about the individual and things of that nature. And it's often the shifting that I had to do relative to, and I have a house full of that tenure of employee base. So I know that cohort very well,
Of course.
and how they think about things. And it doesn't diminish that they can not come in, do an excellent job for you, but they're not trying to get, the crystal in 25 years. They're not trying to get the gold platter that they're never going to use and put on their shelf. They're coming in. So part of this world is, as leaders who have some level of tenure, you might need to shift your paradigm and shift how you think about less tenured talent. But again, the ability to make impact and accelerate that, which we're trying to do, is but one way that I think about measuring, the success of a hire.
Troy?
Yeah. This we could have a session just on this.
I know.
And I know some of the folks on this call we're looking at, and we are as well, looking at the new definition of work. I think particularly since 2020, since COVID, there's the definition of work has changed, and I like to talk about there's a civil war happening between those of us of a certain age, and I'm in that one age, versus those that Maurice was talking about there in his household and in my household. And the civil war is redefining the definition of work. And to Maurice's point, and as you think about, particularly at the stage that we invest in, I give this counsel. I give 2 parts of counsel to folks. Tracy, I tell them, one, at your age, particularly if you don't have any, if you're not married and don't have any kids, that's the time to take on risk, because if you fail, so what? So what? but I also tell them go off and get a job and go and learn something so that when you come back to my, I've never made an investment because of where someone went, but I have made investment because of what someone knows and can demonstrate that knowledge with. And so I don't think that there is a clock to Maurice's point that it has to be 3 years or 10 years to demonstrate knowledge in something. And I think as we think about it, the analogy I think I gave you too when we were preparing for this, the generation that Maurice and I are referencing, came up through this video game generation. If you think about the way video games work, you progress through levels. And as you progress through levels, you get rewarded for that progression. And then you event do one of two things. You go to a new game or you finish up the game because you get bored. And I think our talent management, talent haven't taken into account them because we have this hierarchical thing that we got to have as opposed to trying to reward them as they gain more skills, as they gain more development. And so we've got to find, I think we have to find a better way to reward them so that Maurice, those 3 years maybe become 4, and maybe we get another year out of them. But even if we only get the 3, we value the 3, and we found a way to, when we are reviewing them to come in, and we've had to do this, that we value that 3 and we don't penalize them in a way that I think we would have normally done because we would have called it job hopping. And that's just the truth. We call it job hopping. And they're not job hopping. They're going to the next video game because they didn't get enough of the skill development and enrichment at the video game they were at before. And we've got to see, and that's the civil war. And frankly, we're making investments into that space as people think differently about AI job descriptions. I think we got to rethink job descriptions because of the role that, and I prefer the term digital tools, as digital tools make entry-level jobs different. The job descriptions need to catch up into what we now expect in those entry-level jobs. They just aren't the same. They're not being replaced. They're changing, and we haven't caught up with that. And so we're looking at investments in those types of opportunities.
Gentlemen, we've got about 5 to 7 minutes before we turn it over to the audience for questions. Troy, you gave me a nice segue because I wanted to talk a little bit about how AI is informing the hiring that you are doing, how it's changing executive roles, and are you hiring differently because of automation? Give us a real quick viewpoint on that. We'll turn it over to Maurice thereafter.
I think I just did. I think we got to think differently about how job descriptions are, particularly at the entry level, but as you get into the more senior levels, again, as a strategic tool, I think there's all kind of examples out there that only like 5% AI investments are going to really pay off. And so thinking about where your organization is using AI or these digital tools in a way that either drive better talent acquisition and or acquisition of customers and or something on the bottom line. What are you really using it for? And what is your metric internally of what you're doing it for? I think we've got to rethink the metric itself we're going to measure the success of these tools by.
Maurice?
And Tracy, I would submit we're on a journey and trying to figure it out, and would submit that we don't have all the answers. We are increasingly in tune in what bolus of work can and should be, AI enabled, AI executed. And then that changes, how you think about certain roles and things that you need to be doing. We think about AI really also, and have been from an automation standpoint, that's kind of a little bit of low hanging fruit. What are some of the things that are rote that we do on some kind of frequent cadence that, you could start deploying AI against? And we're quite honestly in the infancy stages of that. Back to an earlier comment, right? I'm not a technologist, right? I know enough to be dangerous. I know the right 3 questions to perhaps ask someone. I really need, a proven technology leader who has a vision, right? And based off of where we are, where our industry is headed, the type of work that we do, how should we be thinking about it? And so we're on the front end of that journey.
Love that. Love that. Will either one of you envision leaner teams as we approach the next decade as a result of AI?
Perhaps. I think perhaps, yeah. I don't know.
One way that I think about it, at least in the near term, is to the degree I free up man hours doing something that AI can do, how do I redeploy those hours to go drive the business? That's 30,000 foot and kind of high level, but I'm less about, at least right now, I need AI because I'm trying to reduce headcount, but to the degree that I can free up some work and I can go redirect that resource that's already built into my cost structure to go drive my top line and ultimately my profitability, I think that's the win. And that's how I've thought about it thus far.
But Tracy, I think the other part to play off what Maurice is saying, I know you're trying to move, is
Mhm.
we have to think different about the professional development. Are we reinvesting these people to reinvent them so they can then go to Maurice said, to be redeployed? So part of this is we have to be willing to invest in them, and then they have to be willing to be retrained or repurposed and redeployed. So it's that there's a new contract being written between employer and employee as these tools come into our organizations.
Yes, most certainly. AI not going away, human intelligence not going away, but the importance of EQ also not going away.
Right.
Marissa, it is now 12:47. This might be a good time to turn it over to the audience. We could continue this discussion for hours. We don't have that. And there's so many different jumping off points, but we'd love to take a question or two or three from the audience.
Yeah, definitely. Thank you, Tracy, Maurice, and Troy. Amazing conversation. I'm sure these sparked a lot of thoughts among our audience. So if any of our audience members would like to ask a question, please feel free to come off mute. We'll add you to the screen to ask your question. Or if you wanted to drop it in the chat, I'll read it out for you guys. Any questions from the audience? Well, I know I've really enjoyed hearing the perspectives, especially as it pertains to how the role of AI may shift
Mhm.
the upcoming sort of talent landscape and the ways in which whether or not it'll be leaner or whether or not it'll be redeploying, those man hours for better value creation. Love to hear from all of you, especially Tracy, as you're working with portfolio companies, what are you seeing as far as any shifts in the roles that folks are looking for, or even as people are, investing differently, whether that's, at the venture level or the portfolio or the private equity level, what are you seeing that could be helpful for our audience to be aware of as they work with folks like you?
Sure. The roles aren't changing dramatically, but there is one role that's emerging, and Maurice made reference to it earlier. It could be called a number of different things: chief information, chief technology, chief transformation officer. As AI starts to proliferate and become a major asset in your organization, everybody needs to be able to use it because we can benefit from using it each and every day and virtual hours each and every day. That is a role that we're seeing more and more proliferate within some of our client companies and some discussions that we have. And that's for organizations that have had some more time to assess and they've got a decentralized operation many times, multiple portfolio companies, and sometimes they are doing this at the operating partner level. Sometimes they're deploying that across, a number of different portfolio companies, or sometimes with larger portfolio companies, they are putting that role directly therein. We've morphed from data scientists and data analytics to folks that have this rigor around how do we truly scale our organization and operations using AI and using technology. Maurice and Troy.
Maurice?
What I'm sorry, Tracy. What's the specific question?
Are there roles, different roles that are proliferating as a result of AI that you're seeing
Right,
on
right.
your end?
But again, you hit the nail on the head for me. It's chief information officer is one of the key roles that we're thinking about. We do have some um, uh, a few great talent that's kind of mid-level talent. This BI, business information,
Mhm.
and really digging into the data for us in a very powerful way, right? It's data that you can turn into actionable insights, and I'm really excited about some of the work that we're doing in that space to really look at data from disparate data sets,
Mhm.
and then someone who can assimilate that into a cohesive type of these are the four insights and the three actions that we need to go do. And we've been doing that more and more each year. It's getting us tighter as it relates to how we think about where we can go drive business. It's making us better as it relates to delivering on our customers' expectations and their KPIs. And so I continue to be excited about that. I'm a junkie for a great dashboard, and these folks, a few at our organization, are really driving that for us.
Just two quick pieces for me. One, and can retrace everything you said. We think a little bit more structured, I guess. When we talk about data, data for us is just it's kind of like a bunch of pictures and trying to put together the album. And really, we want people and tools to turn that data, Maurice, into information. And that information then put around strategy, Tracy, and market intelligence becomes knowledge. And it's at that point you really want to then make decisions. So sometimes we talk about data-driven decisions. I would argue it needs to be knowledge-based decisions, because that knowledge then recreates a do loop. I'm an old computer scientist. Creates a do loop and creates more data, and it feeds its system back again, creating better information, better knowledge, better decision making to create better. So that's that cycle. The other piece, because we invest in life sciences, the other thing here is what artificial intelligence digital tools are doing is changing the pathway of clinical trials. We're actually working with the FDA right now, thinking differently about animal testing, because you have these tools and these data sets that can give us actually better. And so how do you have people who can better do that interpretation? So it's not just the scientists who understand the science, but Tracy and Maurice, how do you have scientists who also who can marry that data intelligence to move us from those data to information to knowledge, particularly on the clinical trial side of our investment portfolio?
Excellent. Looks like we have a question from Evan Melrose. Same challenges exist within member firms. What AI tools or resources have you found to help younger investment professionals working inside of private equity or VC firms? We'd love to hear what peers are using at their investment firms to help junior investment professionals with leveraging AI to make the investment process and portfolio monitoring more efficient. Who wants to take that one?
Yeah, we've got a number of actually tools the team is using. They've been leveraging things like Claude and ChatGPT to build our own kind of tools. That we've got some cool tools that we've developed internally, some proprietary tools. And so I've been very impressed. And so we haven't unleashed as much as I would like, and we're actually in the early stages of unleashing some of that. So I'd say we're still looking at the tools to figure out which ones we want to use, but I'm seeing some good early indications of things the team is using to change how we're doing our investment theses, how we're doing our initial due diligence, how we're doing our tracking of our portfolios. And so we're still, I'd say, real early in thinking about which tools we're going to land on.
One tool that we've been utilizing, Ruby, or RUBI, and it does a great job of streamlining everything from deal screening to diligence to memo creation. Particularly, I can show up to a deal meeting on Monday and look at the Ruby one-page analysis that has reviewed the SIM, grades it, scores it. Again, a tool that we're in the early stages of using at IMB, but that's one tool that we've been utilizing thus far.
Okay, we have time for maybe one more quick question before we wrap up. We want to be respectful of everyone's time.
It looks like Hannah Markey has raised her hand for a question. Is that?
Yes, I do have a question. So I just recently made a jump over to a startup. I'm head of finance for them, and so we're currently going through a capital raise. And hearing you guys sort of talk about talent strategy and management and all that stuff, my question for you all is, how do you see talent strategy evolving as a company moves from that sort of founder-led execution phase into a more institutional fundraising phase? And at this point in time, like, how can we be investing in the capital that we raised and sort of putting it into roles and structures that tend to unlock that next tier of capital?
Yeah, I can take that because that's what I mean. That's what we do at this stage. Is the number one thing we're looking at. Yes, we're looking at the idea and whether that there's a marketability. But as I said a few moments ago, we're looking at that team, Hannah, and how have you put together the team, and not just the core team of those first 8 to 10, 5 to 10 insiders, but also who does your board look like? What do your advisors look like? Who's that entrepreneur surrounding him or herself with? And we spend a lot of our time, I'd say more than 50% of our time, looking at that talent that they surround themselves with. And in some cases, giving them some individuals, as I said earlier, through our Lena, what we call our Lena program. Because sometimes they've got a hold, as Tracy mentioned earlier. And so, particularly as you get to those price rounds or even the pre-price rounds, the conversation is going to be more about, do you have the right, if that's the strategy you agree, and we agree on that strategy, do you have the right team to get you there? And that more and more is a conversation. And too many times, as I said a few minutes ago, that initial founder isn't surrounding him or herself with that, right? Because they've got some blinders on. They've gotten their own risk profile together, and that risk profile forces them to surround themselves with people that they know versus people that can push them.
Maurice, really quickly.
You can move on to the next.
Okay, no worries. And Marissa, you said there was one more.
Yes. Oh, well, there's two more actually.
Okay. All
One
right.
quick one for you, Tracy, and then
Okay.
Sharifa will end with your. I saw you raise your hand, so we'll end with you. But the questions for Tracy, then that you play in three spaces: nonprofit, publicly traded, and private equity VC. How does your approach differ when working for these types of clients or different types of clients, rather?
Always a great question. Let's just say there is the approach in terms of quality control is the same. The rigor around and the speed and alacrity with which we have to move probably is a bit more 3x for private equity and or family-owned enterprises. Probably a little bit more deliberate for corporate and a lot more deliberate for the social impact or nonprofit sector. We're typically trying to find CEOs, any one of their direct reports. We can typically do that in 75 to 90 days of process. Somebody starts within day 120, day 150, based upon, notice periods. Sometimes you had to move a little bit faster with some of these other entities, but you got to make sure that all clients know that, as Maurice mentioned, the axiom of hire slowly and fire quickly is still built into a real serious rigor around due diligence and making sure that you don't go so fast so as to make a bad hire. That just won't work. And obviously, that's in 31 years, that's never been something that we've had a major issue with. But it can end one's career, and it can definitely damage your reputation and damage your client relationship, to say the very least.
Great. Thanks, Tracy. Sharifa, we'll close out with you.
Thank you, Tracy. Great panel.
Thank you.
My question is, as for Maurice and Troy, as you look over your time in hiring, what would you say would be the best leader profile success factor over time outside of the four corners of the job description? Has it been the culture that we talked about, both Troy and Maurice talked about, really, where there was not success or where there was? And then within the portcos, you could either answer from a portco perspective or just overall leader perspective, um, you know, piggybacking on what you said with org design and not having that structure and clarity.
Sharif, some of the things that I look for, I do look for this leadership quality that someone has demonstrated proven leadership at every step that they are. And what I mean by that, ability to cast a vision, keep people motivated, engaged along the journey to achieve that envisioned future. And they can just example after example after example demonstrate that. So I look for real leadership. I look for curiosity. One, I need curiosity around the table. I can't be the only one asking the 10 questions and pushing and challenging the team. I need people who have just a real genuine curiosity. And after they've asked why 5 times and it sounds cliche, but then they ask why additional 5 times. And then lastly, and clearly equally as important, is technical skill set, right? And I want somebody that's indexing way above the top quartile on that which they do. I want the best CFO that I can go find. I want the best CHRO that I can go find. But those are 3 kind of quick hits relative to how I think about talent.
I don't disagree with Maurice's points, but again, where we invest at the early stage, I think the hustle. I think you use a different word, but the hustle is a key part of what we're looking for, and the willingness to play multiple roles. Again, when you're at the early stages, yeah, I might hire you as the CFO, but I might need you to go and sweep the floors or turn off the lights or do something else. And so the ability to be a hustler and to willing to be flexible.
Love it. Love it. Okay,
All right.
Marissa, we're at the top of the hour.
Yes, we are.
We want to thank the audience, number one, for listening. I want to thank Maurice Markey, CEO of Pro Food Solutions and IMB Partners portfolio company. I want to thank Troy Stovall, CEO of TEDCO, for bringing their unique perspectives about talent and leveraging talent in an ever-changing landscape for PE and VC. We talked a lot today about the types of leaders that we seek. We talked about accelerating and being proactive and not reactive to challenges that are faced in portfolio companies. We've talked about the proliferation of AI and other drivers like workforce changes and shifts in how we actually do business as also key determining factors for success. We talked a lot about, there's no one size fits all approach to getting this right, but that due diligence and great partnership with your search firm and other service providers will help you get to the bottom line results that you need and deliver the value and ROI that is desired. But thank you all for your time and your participation, and always look at this as an opportunity to continue a discussion. Don't view this as a what I would call the motivational speaker where you only get a chance to talk to somebody within this hour. Let's keep these conversations going and ongoing. Have a great rest of the day.
Thanks, Tracy. Thanks, Troy.
Thank
All right.
you.
Thank you,
Thank you,
gentlemen.
guys. You're welcome.
Thank
Take
you.
care,
You're best.
everyone.